we discuss, continuing to build on that. But what do we do? Do we build on that? We love the idea of buying a retreat somewhere away, somewhere that we can go to, in the country. I had some clients come to see me and they owned 2 investments. They'd gone hell for leather and purchased 2 investments straight off the bat, right, before they'd come in to seek advice. And they were swimming in thousands and thousands and thousands of dollars of credit card debt.
G'day everyone, this is Iynka here. Welcome to Investor Journeys, where we chat with everyday Aussies and seasoned investors about their property journeys, the wins, the stuff-ups and everything in between. Whether they've got one property or a whole portfolio, we dive into how they did it, what they've learned, and what their journey's been like so far. No fluff, just real stories from real people. So let's get stuck in. G'day everyone, welcome to the IJ podcast. We're here with another episode and I've got a very exciting guest today. It's actually someone I've known for a long time. I've worked with him professionally, personally, and look, an all-around great bloke. So Blyth, welcome to the podcast, mate.
Thank you very much for having me, Iynka.
Not a problem, not a problem. Well, thanks for joining in. So, mate, to give a bit of a background, we connected quite a number of years ago from my personal circumstances. I think I got referred to your business, who you're still with, and we'll talk about that in due course. Now, that's a financial advising business, and we connected up and we've worked together for a long time personally. But then essentially when I started my business, we were in touch in terms of brokering, and you've helped many of our clients and continue to do so. So you've been a great asset for me, for my clients, and I get nothing but good feedback. So yeah, I suppose that's a little history about when we connected, wasn't it?
Of course. Yeah, no, it's been a pleasure working alongside you personally and also your clients. It's pretty amazing seeing the client does go on, in particular with the clients that you've been able to assist, that I've been able to help out with since you've started your own business. It's pretty impressive to watch.
No, thanks very much. No, I think the reason I think we get along so well is because we see the world in a very similar view with respect to finances and investing and everything like that. So I think that's been great. And we've certainly been in a lot of sticky situations where you've got our clients out of. So you've worked hard and everything like that. But look, we'll talk about that in due course. I'd like our listeners to know a little bit more about you. What can you tell us a little bit about your background, where you grew up, and really, you're a financial advisor and you've gone into that space now. Was that ever a topic over the dinner table?
Yeah, of course. Thanks for the intro. And I guess it's been a very interesting journey. I guess to sort of give you some understanding. Grew up in Melbourne, and I had a really lovely childhood. It was a fantastic childhood. And money was always a bit of a funny thing. Growing up, we did have a couple of financial concerns, in particular when I was fairly young. It was interesting with that being, and inadvertently, I think led to my parents, unfortunately, going their separate ways. Still, they both are very good friends, actually, extraordinarily good friends, which is amazing. Helped my sister and I out a tremendous amount. But there were some interesting times. What I look back on as a fairly impressive school, had a great upbringing, and had my stepmom introduced into my life, which is something which is going to be interesting as well as we do go on, because she's a real estate agent, has been working in property for a number of years. So probably part of, I guess, my understanding of property and how it does work and look probably stems from her. But it was interesting, I guess, and a bit interesting from a financial aspect growing up. But as I said, I was lucky enough to go through from schooling into university. I did a double degree, I did engineering university as well as finance, and graduated in 2007, spent 2008 working and earning money so that I could eventually travel away overseas, and spent a bit of time overseas, which was amazing fun. Had a great time with a couple of friends that I traveled away with. Came back, and I always thought at university that I was going to be an engineer. That's what I wanted to be. All right. And I ended up coming back from overseas, and I came back and the GFC had just taken hold at the end of 2008. And the engineering firms in any place that I would applied for, they'd all shut down grad programs. So there was pretty much nobody being employed. In fact, I had some friends at the time that had just been recently employed at financial firms and big four banks that were being laid off effectively after 12, 18 months of working there, which is pretty interesting time to start getting into things. Either way, I got back to work when I was in Melbourne and was probably enjoying myself a little bit too much. I was working in landscape gardening and having a great time, not as much responsibility, and earning a bit of money, and just enjoying myself. Funnily enough, my straight away. And that was in financial planning. And I'd done a financial planning course back at university, a financial planning unit, sorry. And I was deemed as RG 146 compliant, which is what the compliance sort of terminology was back then. So anyway, landed myself in financial planning, and the rest is history. And I look back at that now and think, God, I'm really lucky to have landed in that space, because number one, I couldn't see myself working in engineering. I just don't think I was really that sort of way inclined. And I get the opportunity to speak to people, and that's what I really enjoy doing. That is what I love doing. The personal contact that I have that's what I value the most. That's truly what I value the most. So I was at that business for 7 years, from 2009, to 2017, and then decided to start my own business with my two business partners, and Act on Wealth was born. And we've been working now for the last 8 years in this business, offering financial planning. It's true financial services, financial planning, mortgage broking. We also offer tax advice and also buyers advocacy as an FYI as well. But it's been a labor of love, but it's been something that I've thoroughly enjoyed. So it's been a bit of a meandering sort of a journey, but where it's ended up, life's a funny thing.
Yeah, I mean, you've done phenomenally well. And I think it's interesting because, I mean, look, I was an engineer, graduated in 2006, worked in New Zealand until 2008. And I was hell-bent on coming to Australia, I think like most Kiwis, around 2008. And that's when we faced the same, we heard of all the same issues with the GFC. And I pretty much had to put my plans on hold because I heard, Australia wasn't hiring anyone. In fact, they were letting a lot of people go, and it was just not the right place to go to. So I had to hold on to my job in New Zealand, whatever I could, I suppose, at the time, because New Zealand was in the same boat. But I was fortunate enough to hold the job, and I came over when things settled down in 2010. So it is a similar boat. But I always wondered to myself, what my life would have been like if I went down your journey and went into financial services and everything, because I continued on being an engineer all the way up until 2022 when I started this business. So I think it would have been an interesting journey because, look, finance, money, I think that's been so intriguing to me. But I think it really sort of took my interest sort of maybe over the last sort of 5-6 years. So perhaps engineering was the best course for me at the time, and probably the right move at the right time for me. But it's interesting how life works, how the journey works. And like I said, you've done extremely well. Act On is the business that you currently have at the moment, and a great company. So for anyone out there looking for financial services with all those type of subsidiary services, reach out to Blyth. It's a great company.
We'd love to be able to help.
Absolutely. Now, your property journey, when did you start getting interested in property?
Yeah, it's a really good question. I didn't know much at all about property when I entered into financial planning. One thing that they don't teach you about in university is property, right? It's really a lot about shares and bonds, right? They're the two things that we got taught at university. I went to Monash and did a great course, and I remember it vividly. But in terms of practical application of what I know as a financial planner, very limited amounts. Right. In particular, obviously, back when I did the course, which was probably 05, odd, when I did the specific unit. So I entered into financial planning in 2009, and I didn't really have much of an understanding at all on property and how a mortgage really did work. Right. I was really green. So it was a real crash course in sitting down with clients, understanding their situation, and really getting a clear, concise picture of how property did fit into clients' portfolios, right? And as with any job, the best ways to learn is on the job, effectively, having things practically applied. And so it was a really steep learning curve, which was great. Right. And we got trained really well, which was fantastic. So naturally, obviously, conversations that I could have would get better and better as well as I began to understand exactly how property did fit into clients' portfolios. And it really got me thinking about property as an asset class. One of the things that was really, I guess, one of the ways that we could sort of develop within the business was doing your real estate course. And so I did my real estate course as well, did my real estate license, which I still hold to this day. And that furthered my understanding of exactly how it worked. Look, in particular in Australia, obviously having to go through that sort of education or further education. So it started in 2009. And as I gradually worked more and began to build my own client book or my own, I guess, my own client book, it was something that I would love to be able to discuss with clients, because naturally living in Australia, right, and in particular, probably Victoria at the time and over the next few years, property went through significant growth and upswing post GFC, right? And so being around it, talking about it, having clients really interested in how they can get into the market it was exciting, and it really is. It was exciting to be able to educate really fueled my desire to become accredited as a broker, which I did as soon as I started the business as well, so that the conversations that I can have are as deep as they possibly can be in that property space. Because, as I said, living in Australia, everybody talks about property. People it is certainly something that over time has developed further. And I think I mentioned my stepmom at the start. My stepmom is an agent at Fletcher's in Canterbury, and she obviously works around property and has been doing so for a number of years. She knows it and understands it really damn well. And I even got my dad assisting with her as an agent as well. It's funny how it does all work. But that really started back when I started financial planning. So in '09. And from there it's grown, and to the point now where obviously I discuss it with my clients and we can facilitate and we can help with lending and do all those sorts of things.
Yeah, absolutely. No, '09, '10, I mean, property was popular. I feel like these days it's just expanded so much in terms of the media and social media and all of that. So I suspect back then the resources were a little bit different as well in terms of what you can learn and how you can learn. Nowadays it's almost like an overload, in my opinion. You get all sorts of opinions these days, but back then it's probably a great point to start, I would say, getting into real estate. And you probably didn't know that at the time, but it's a great insight into how you really got into it. So you're looking into property. Do you want to just tell us a snapshot of your journey through property and what you bought and what you've got at the moment?
Yeah, great. So my wife and I have been lucky enough there's a bit going on personally, obviously with kids and private schooling and things like that. And we've got a 2.5-year-old. So we have an investment portfolio, depending on who you speak to, 1.2 to 1.4 odd is where we'd expect it to be. I've actually just recently refinanced that, funnily enough, in terms of lending, around 790 odd $1,000 worth with lending around that. We discuss continuing to build on that, but what do we do? Do we build on that? We love the idea of buying a retreat somewhere away, somewhere that we can go to in the country. And is that something that we would rather do, or do we want to continue to invest? Because they're the two routes that, and it's the same with any of my clients that they can take. Where does the importance lie? Is it lifestyle at the top? I always think about it in terms of a pyramid. Where are your priorities, right? Is the priority is lifestyle? Is it lifestyle and investment? Are they level pegging, or is it investment at the top? And these sorts of discussions I have with my wife very regularly.
And I'm sure with your clients as well.
Oh, exactly right. It's something that I discuss with every client, whether it be new clients that we onboard or existing clients. It's always a matter of understanding really in the pecking orders, where are you guys at? And it's a matter of trying to understand that and interpret that as well, because sometimes it can be difficult to articulate. So sort of being able to identify where they are at. But yeah, we've been lucky enough to do reasonably well out of property, which is great. In particular in Victoria, which over the last 3 or 4 years it's been a tanking state for plenty of other reasons, which I'm sure everybody does know, and I don't want to get on my soapbox about that, but that's a story for another time. But yeah, we've been lucky enough to do pretty well out of it, and it's been good to us. Tax benefit, all those sorts of things.
Yeah, I'd love to know. I mean, you've obviously been in the financial services game for a while, and the rhetoric out there is that the financial advisors know a lot about the shares and the ETFs and all those mutual funds. You guys are a little bit different because you sort of encompass a lot broader scope there. So from your perspective and personally and with clients perhaps as well, whatever you can share, do you have basically an emphasis on diversifying that type of portfolio, your investment portfolio with those different assets? And yeah, do you want to just share about your mindset? Because yeah, again, with your background.
Yeah, of course. Yeah. Financial planning 101 is always about diversification. And I do and make sure that clients, if they do have a specific comfort with an asset class, which typically, if they are, when you sit down with a client initially, if they own their own home, generally they know property and they understand it, right? And so they naturally feel comfortable with that. With that being said, obviously, property, as I discussed with any client, it can be a lumpy asset. You can't just sell a room; you have to sell the whole house, right? So you can't pick and choose how that does work. And there's inherent risks associated with property like any other asset class. So yes, it is definitely something which I feel if a client does not own property in a portfolio at all, I definitely discuss it as an asset class, whether it is going to be suitable for them or not, which is obviously going to come down to time frame between now and retirement and all of those sorts of things. Right? If you are gearing into property, is gearing suitable for your current situation? Are you planning on having a baby in 12 or 24 months where you're going to be taking extended time off? Those are the questions that really need to be asked. Making a property investment isn't as simple as saying, you've got the ability to invest now, let's give it a crack. There's obviously a hell of a lot more to it. So yes, I am of the school of diversification is extraordinarily important, is in fact probably the place that I do start out, but it's also about understanding clients' preferences as well. And again, and then sort of being able to make sure that I'm hitting the mark when making recommendations. So most definitely. So it's, as I said, yeah.
Yeah, no, I was just saying that I'm coming from a property background and speaking with a lot of clients, but I'm of the same opinion. I think diversification is really important in an asset investment portfolio, whether it be shares and property. And that's why I was interested in your take on it, because as mentioned, there's a lot of financial advisors out there who don't push property at all. Like it's all about the shares, it's all about the ETFs and all that kind of thing, where I can see from you guys, you're broad-based, you're thinking. And I think the important thing is you're informing the clients of the pros and cons of both, which is important so they can make an informed decision, isn't it? We might have lost the last question, so I'll just repeat it. Right. There's a bit of, so you can hear me okay now?
Yeah, I can now.
Okay. So I'll just start again wherever I was. What I was saying was that the rhetoric out there with financial advisors, they'll only be pushing one type of asset class, whereas I think it's good that you guys are looking broad-based. But I think more importantly, you're informing the clients based on their scenarios, the pros and cons of both, and just letting them make the decision at the end of the day, isn't it?
Yep. Yeah, it's fundamental to what we do is being able to understand our client, right? That is the most important part, right? So getting an understanding of where they are now, where they want to be, the things that are going to be happening with them over the next few years, what's important to them, and then trying to show them an investment journey that's going to help them achieve what they want to long term, making sure that you've been able to tick all of those boxes as well. So as I mentioned, and I think it's a really good one and it sticks out in my memory. I remember it was when I started out really young in 2011, I had some clients come to see me and they owned 2 investments, right? They'd gone hell for leather and purchased 2 investments straight off the bat, right? Before they'd come in to seek advice, and they were swimming in thousands and thousands of dollars of credit card debt because she knew she was going to have a child, but she had a child and she spent 12 months off work, and it was not the time or the place to invest, and it put them into significant financial distress. And that really stuck with me. And it was, they, in their mind, they were doing the right thing by investing, right? But they hadn't really thought about, obviously investing means that you're borrowing. Yes, there is not a huge out-of-pocket cost, but if you're dropping one income, right, and you're wanting to spend 12 months off work, that out-of-pocket cost becomes huge, right? Because not only you're not getting any of the gearing benefit because that specific person isn't working anymore, but then you're dropping, 50% of your income, right? And so you're out of pocket for cost of living and also the tax benefit side of things as well. So
and the credit card interest that's piling up as well.
Now property is an industry. I think back in 08, 09, it wasn't the same. It is now its own industry, right? And I mean that from like an investment piece. And people love the idea of getting into property, but it is a matter of making sure that it is the suitable solution for you, because there's push and pull factors in making that decision.
Absolutely. No, I loved also, like when I was working with you guys at the start, I loved how you do the portfolio modeling and generally with the money management. I love that side of things because you can see what, based on your situation, how that's going to turn out, I suppose, at the end of the day. And then you can make informed decisions about what you can and can't do now based on your risk tolerances. I really like that. Yeah. In terms of, you work with a lot of property investors specifically, where do you see sometimes things not going quite right, whether it be mindset or perhaps what they've done before? Do you have any stories where, or I suppose any tips for the listeners there that you've seen, I suppose, that hasn't turned out quite what it should have been?
Yeah, I'm a firm believer in holding and not selling unless required. That's my fundamental belief. You don't acquire an asset where you've got a sunk cost of 5% upfront, especially something obviously as expensive as this property, to offload in 12 to 24 months. That's my personal opinion, right? Obviously, there are going to be times where you can make such significant gain in a 12 to 24 month period, which in and of itself I see is to a certain extent, a bit of a bubble, right? I guess that's what an asset bubble, which if you get an offer that is too good to refuse, the Godfather offer, I get it, I understand. But at the same time, property is a really funny asset. I'm going to use as an example, South Australia and even Perth and WA, right? South Australia did not perform at all. It hasn't performed at all. The reality is the property market in South Australia was very sleepy, right? Until 22 odd. And the only thing that I can see, or the reason why, is that number one, obviously COVID hit. People potentially wanted to get out of certain states and migrated elsewhere. But also there was very little value in investing into markets like Victoria and New South Wales anymore, right? And so you almost double your money now, right? And so the important part with property is that as an asset class, when they say holding a growth asset is for 10 years, I almost see it. I see it longer than that. I really do, because any of those specific places, Perth, again, investing in 2010, you would have seen a bit of upswing until 2012 when the mining boom sort of hit a peak and then fell significantly. And only in the last 2 to 3 years have you really then seen that money back and then some, right? And that's longer than 10 years, right? So I really feel that if anybody is to be investing into property, this isn't a short-term thing. You're investing in there. It's not even a 10-year thing as far as I'm concerned. This is 15 years plus at a minimum. So I think that's really something that I've noticed across clients that have been invested in property. And it's funny, I bumped into old clients of mine from the previous business who I'm, funnily enough, I actually bumped into them. I went down to the peninsula on the weekend, saw them. It was really lovely and really unexpected. Catching up with them on Tuesday, actually, to have a conversation. But they'd invested into South Australia and Perth and they hung on, and they've now made an absolute fortune out of it, and good on them, right? But they did the right thing. They held, right? And they made sure that they did follow all of those things that are fundamental to any sort of investment, and they've done really well out of it. So Michelle and Mark have done it. Yeah, good on them.
I mean, I completely agree. I mean, it's unfortunate that the delayed gratification piece doesn't seem to exist with a number of investors. And that's just, I think a lot of life these days, probably back then, people were much more patient. No, I'm generalizing, but people were patient, and it was a slower time, but they would hold on to what they had. And in my opinion, these days, the shares and crypto and boom and bust, people want to try and transact and make money quickly. And unfortunately, the way property works, as you said, there's so much holding and in cost basically to get in, that really to make your money back, you need to go through a couple of cycles. And those cycles aren't 2 years, 2 years apart. They could be 10 years apart or whatever, however many times. So you got to go through at least a couple of cycles to make sure you make the most out of property, in my opinion. And with that, most people's goals, they're also inherently quite high. And so in order to achieve those type of goals, you need to, you need to hold on to those type of properties. Now, some people might do okay and flip and everything like that, but just the way the costs work, the taxes work and everything like that. No, I completely agree that it is a long-term thing. And I think delayed gratification is really important in property because, it's not like shares. We can just get in and out in a few days. It's a completely different beast. So
100%. Yep, definitely. Again, it's with the lack of liquidity and all of these sorts of things, you just want to make sure that you're covering off and you've got your buffers right. You know that you've got certain things that if, let's say, for example, and I know in particular with your clients, you are looking at existing property, which I think is where a lot of value is at the moment, in particular in this state, I would think as well. You're like, if something goes wrong and you've got an oven that breaks, right, you've got $2,500 lying around because these things do happen. Right.
It always happens together too.
It's 100%. I think about my investment. I had it was in June and I was driving home with my wife and I had a message sent through to me by the tenants. Was it the tenants or the rental manager? I can't remember. I think it was the tenants who got my number directly from the property manager because I believe it was that. Anyway, it was the water pipe leading to the house had burst, and it had burst. Oh no, that's what it was. It was in the area we've got a group chat, and anyway, it came through in the WhatsApp chat. I think that there's water leaking from the place. Anyway, I went there on a Saturday night. I had my wife in the car. I had my baby in the car. It was a tremendous amount of fun, but I had to get this hole plugged, and luckily, the neighbours assisted dramatically. But these sorts of things can happen. It is a part of owning property. So as long as you're again, eyes wide open, these sorts of things can happen. Now, I probably went above and beyond. You could obviously get a plumber there, but that's not necessarily the way that I'd like to do things. I'm a bit more hands-on with that sort of stuff. I spent an hour and a half and it was freezing cold in Melbourne. It was good fun and made sure that it was all sorted, right? So these are the things that can happen. Right, that's life, right? Life does happen, in particular when you're owning something real that people live in. It is important to understand that you need to, obviously, they're paying your rent, you provide a service effectively.
Yeah, I think the irony is that your property is so intrinsically aligned with your money management. And one of the big things is we always ask, what is your savings rate? Because not just maintenance and everything, you've got to accommodate cash flow. No properties at the moment are positively geared when you talk about net at the moment. And so you got to make sure your savings rate and your buffers, like you said, whether you've got 10, 15K per property is generally what we advise, and the bank to be able to sustain any maintenance or emergency buffers in place. So it's, very important. So I suppose my final question for you, mate, is exit strategy for you. You're talking about potentially the retreat, or potentially investing more? You're at a bit of a crossroads at the moment.
Yeah, I think about this a lot with my wife as well. I started this business and it is to be something that I can continue to work in over time. One of the things that I've really realized over the last probably 2 to 3 years, when I started the business, I was like, you know what, I want this business to grow and I want to manage people and I want to do all of these things. And what I've realized in particular is that's not what is necessarily important to me. What I really enjoy is speaking with clients. That's what I enjoy doing. And that's where that's where I want my focus to continue to be, so that I can continue to provide value and provide a service to clients that they deem as outstanding and good enough for them to refer through friends and family. That's really at the core of what I want to do. And I'm happy to continue to do this for a hell of a long time. One of the only silver lining of COVID, Iynka, is that it is really easy to do business these days without actually having to be in an office. Right. And so my wife and I talk about having somewhere in the country to be able to go to. We talk about my wife's Lebanese, buying a property in Lebanon, right, to be able to go to, which is an amazing spot if you haven't been there, actually a really cool place. But ideally it's cool. You should do it. It is a hell of a lot of fun. But we're going to be holding. That's our bottom line. And whether or not or how we do achieve what we want to long term, right, is going to depend what we do want to do long term, which is something that we're a little bit undecided about. What I do know is that I enjoy what I do enough to be able to continue to do this for a hell of a long time. And that's something which I can say very easily. And I love that. And again, it took me a little bit of time to realize that it's a labor of love. And I think I said that at the start. And yeah, so I can continue to do this for a hell of a long time, mate. Exit strategy, my clients might be wanting to move me on.
And not many people can say that.
Exactly right. And I'm lucky enough to be able to do it. So I actually haven't really necessarily thought about the exit strategy because things are ticking along really well in the background. So I'm not necessarily wanting to or needing to look at exiting because I love what I do. So it makes life a lot easier.
Absolutely, mate. Well, that takes pressure off, doesn't it? And in terms of what you need at the end of the day. And mate, I'm just like, that the ability to get referrals and bank on that and the client successes as time goes on and just seeing the results, I think that beats anything. I had a story the other day where we've helped a client. They're on their they've had 3 properties now, and they've got enough equity in their property where the husband was able to get out of a job which was very high paying but very stressful. He hated it, and then downgrade to a lower paying job because he knew he had the security with these investment properties to be able to do that. And I think it's such a big mindset when you can create wealth, even though I suppose it's on paper, it gives you that mental stability and the options to be able to do what you want. So I think that's great. But no, I know we both are in a very fortunate position. But yeah, look, a lot of hard work as well. So at the end of the day, that we've been able to get into what we want. So it's a big blessing there. So no, it's great to, I suppose, get your insights. And again, for anyone who's looking to get some financial advice, whether it be through money management, property, or anything like that, reach out to Blyth. He's a great guy, and I've known him personally and we'll continue to work together. So really looking forward to the future, mate. And thanks again for jumping on today. I appreciate your patience with some of the connection issues we've had. But yeah, really glad you could come on today.
Easy done, Iynka, and it's been great working alongside you. It's pretty amazing to see how you've been able to help out a number of your clients, repeat clients, clearly, that I've been able to then work alongside with their lending needs. And they're obviously
Very kind words, Blyth. Very kind words. No, thanks again for coming on. And yeah, well, no doubt we'll be speaking soon, mate.
I've got no doubt. Thanks, Iynka.
No worries. Thanks, guys, for tuning in, and we'll catch you on the next episode. Hey, guys, thanks for tuning in. If you enjoyed the chat, feel free to drop us a rating on Spotify or wherever you listen. It helps us reach more listeners to help them with their journey. Catch you in the next episode.